Wall Street is getting invited in anticipation of the greatest show on earth. Right, Bitcoin has been the best performing asset for the last 15 years, and Wall Street's basically been boxed out of it. They haven't had access to this asset, and so I think that's what you're seeing in that pent up excitement. One thing that I do caution these Wall Street investors is you can't trade this like other assets. We saw just yesterday about $1 billion of open interest got wiped out. The guys over at Reflexivity Research did a fantastic job outlining, saying, this asset in 2021 went up almost 800% from before the pandemic started to the kind of the top of the market.
Yeah.
During that time, there was 30% drawdowns. If you're going to try to get levered long and think that, hey, ETF gets approved and this thing just goes to the moon, you're likely to get shaken out or get liquidated.
That is really good advice. Just beware the volatility.
This thing is on a risk-return basis, it's by far the most attractive asset in all the financial markets, but it comes with tons and tons of volatility. And so if you go back to 2017, it was $1,000. We're up 45x since 2017. But along the way, we've had two 80% drawdowns, a plethora. I can't even count how many, 30+% drawdowns. And so Wall Street is saying, hey, the ETF's coming. Here we go. Now, I do think over a long period of time, Bitcoin's price is going to continue to go up. We're going to have a persistent bid from all these ETFs. Another thing people aren't talking about, everyone's talking about the primary fund flows. So retail or institutions buying this ETF. But actually what we're starting to see now is other publicly listed funds or ETFs are changing their prospectus to say that they can put up to 15% of their AUM in the Bitcoin ETF. So if you have the best performing asset and you've got an ETF that's lagging, why would you not put Bitcoin in your ETF?
But all of this really formalizes the greater fool aspect of why Bitcoin should go up, right? It's just there are more people who are going to get in there and buy, and they have a new easy way to do it. Meanwhile, it's easier to own Bitcoin directly than it was to own a barrel of oil or a gold bar or a futures contract. When those things were introduced, it didn't change the overall price curve.
I think there's 2 points that you're making. First is when you buy this ETF, you are not buying Bitcoin. You are buying exposure to Bitcoin. But if you want to actually own Bitcoin, take self-custody, you should definitely go do that and not do it through the ETF. The second thing, though, is this kind of greater fool theory. One thing I always say to people is, what is the most valuable commodity in the world? In my opinion, it's computing power. Bitcoin is the strongest computer network in the world. And so when you're buying Bitcoin, you're buying an asset that is backed by the strongest commodity in the world. So when you start to think of it from that perspective, yes, it is internet native. Yes, it is for this kind of digital generation. But those people don't look at oil or gold or anything else as the most valuable commodity. They look at computing power, and that's why Bitcoin is so attractive to them.
Can I ask you a very simple question? If I own Bitcoin through an ETF, do I have greater protection of my ownership of that Bitcoin interest than I did through some of the exchanges where I've heard some nasty stories?
So you definitely have the exposure, and obviously it's a regulated entity. You have the ETF structure, all the things that I think Wall Street really enjoys about the protections of those regulated funds. What you don't have, though, is direct exposure and ownership of Bitcoin itself. So one of the beauties of Bitcoin is similar to cash. You can go to the ATM, you can take the cash out of the machine. With Bitcoin, you can actually take self-custody. You can own it. You don't have to rely on any counterparty. You don't have to rely on an exchange. You don't have to rely on an ETF provider, etc. And so people have to ask themselves, what is my comfort level? Am I comfortable taking self-custody, or do I just want the financial exposure and I don't want to deal with that? And I think that that's where you're going to see a lot of people who have been sitting on the sidelines. Institutions, they can't take self-custody. They need the ETF to be able to actually allocate to the asset. If they approve it, I think that there will be a lot of short-term volatility, and then we'll kind of get right back on track, whether it goes up or down after the approval. If they reject it, I think the same thing would happen. There would be a lot of kind of short-term volatility, and we'd get right back on track. The beauty is with Bitcoin, if we go back, we saw something like this. China had over 60% of all mining inside of their borders. They completely banned mining and kicked them all out. 50% of the hash rate went offline. By the end of that year, May of 2021 is when it happened. By the end of 2021, mining hash rate was back to an all-time high. And so this thing is just resilient, it's anti-fragile, and it continues to just do what it was designed to do.
But that's true, although the risk-reward, the returns based per unit of volatility you cite, it really depends on the starting point. Right? I mean, 2.5 years ago, you were here, you were saying $100,000 really soon, we're going to get there on Bitcoin, and it's been nothing through this inflationary spike and a Fed tightening cycle.
I always say, look, at $8,000, right? I thought I was going to 100. It only went to 70. I was off by a little bit, right? But in terms of, I think these directional moves, again, it goes back to there is a lot of volatility here. Yeah. And I do think that the volatility will dampen as obviously ETFs and kind of more persistent sticky holders come into the market. But remember, we aren't just talking about an ETF either. We also have the halving that's coming up at the beginning of Q2, and we've got to return back to loose monetary policy. And so I think that we're going to see a pretty significant move in Bitcoin. Just don't expect it to go from 45,000 to $1 million tomorrow.
Welcome to the Crypto Teacher. And you know I come back with that video just to make you think.
Don't forget to like and subscribe to the channel.
And guys, make sure you join the Patreons. If you're not a part of the Patreons, make sure you're hitting the cash out. And we have Pump on CNBC on the spot Bitcoin ETF. Investors get to join the greatest show on earth. And we're going to finally get the SEC decision. And it's going to bring a lot of temporary volatility. But guys, we know around this time we already get volatility. And then we know CBOE is launching Bitcoin and Ethereum futures on the 11th, which is going to bring even more volatility. And then on top of it, we have the government shutdown looming on the 17th. But guys, don't forget, we already have spot Bitcoin ETFs around the globe. And the Bitcoin ETF is just exposure. The same way you have gold stocks is just exposure. You can either have the physical gold in your possession the same way with Bitcoin. You can hold it yourself. But the Bitcoin ETF is going to take a lot of volatility out of your investment. But a lot of people love the volatility of Bitcoin and crypto. And then we have the Bitcoin halving in April, which I don't see a lot of volatility. I think the Fed rate cuts are going to line up with Bitcoin making another move. Remember, the Fed and the emerging markets are going to give us the signal. And remember, the Crypto Teacher told you. And we have the Bankman sentencing coming up. And then also we have CZ sentencing coming up. So Binance's CZ sentencing is February 23rd. And we have the Bankman March 28th. And we definitely know there's going to be a movie surrounding these two. They have been connected ever since the FTX collapse. So guys, make sure you get your popcorn, sit back, and let it play out. And then we have the Biden administration handing out $39 billion for these chips. And remember guys, all the distractions that we see, social media, through mainstream media, through television, it's all for the fourth industrial revolution. So I'll be doing a Patreon newsletter for the Premium Stock Channel. Guys, this is so important. You have to follow the money. And remember, the Crypto Teacher told you. Because he knows. When it comes to the NWO, it's all planned out. You have a wonderful day.
Understanding sort of the ways people have lumped them together, two of the largest exchanges of their time and all these sorts of issues. I think they're very, very different cases. Particularly the criminal case involving CZ is very, very different from the criminal case involving Sam Bankman-Fried. First of all, FTX was a house of cards, right? That collapsed, and then a criminal case sort of began. Ultimately, what this settlement allows is for Binance to continue operating, to build compliance controls, and to sort of meet the moment, meet the requirements that are going to be set up for it by the U.S. Treasury and others. So it's, on the one hand, you have the collapse of cryptocurrency business. Here you have a massive fine, but the ability for the crypto business to build compliance and move forward. From a pure criminal perspective, I spent about 11 years at AUSA as a federal prosecutor, and the cases are really interesting because it shows, on the one hand, where someone did not cooperate, did not accept responsibility, took the government to trial, and denied all responsibility, ultimately lost, and now is staring down the barrel of a very, very long sentence. That's in the SBF case. In the CZ case, you have something entirely different, right? You have lawyers who apparently came in, the defendant came in, met with prosecutors, cooperated with the government, ultimately came to the U.S. willingly from a jurisdiction that would not extradite him likely, and now is looking at a much lesser sentence, if any sort of time served at all. So I say all of that to say, as an AUSA, it is very different to have a defendant that forces the issue than one that cooperated, and the one that cooperated is going to be treated much, much better, especially when you're accepting responsibility, which it seems like he's done in this case, that CZ has done in this case.
Grant of $162 million to Microchip. Microchip makes these small chips used for very specific technology tasks, so not like the NVIDIA chips that we always talk about used in AI systems. These mature chips are critical, though, for America's auto sector, the industrial, as well as defense industries. So what's the money is going to be $90 million of the CHIPS Act grant going to modernize a fab in Colorado, and the remaining 72 will be for a fab in Oregon. Senior administration officials promised this grant would triple production and provide roughly 700 new U.S. jobs. The goal is, of course, to reshore and be less reliant on foreign suppliers. Rather than pick Intel or Taiwan Semi as first recipients, the Biden administration is choosing to focus on national security chip producers like Microchip. Just a few weeks ago, the first official CHIPS Act award of $35 million was allocated to BAE Systems, a military contractor. So the $53 billion CHIPS Act funding actually has $39 billion allocated to all of these manufacturers on American soil. The Department of Commerce will have their hands full after receiving roughly 570 statements of interest and over 170 pre and full applications for funding. That means out of that $39 billion, there's still a lot more money left to be dispersed to other companies. So we're expecting more awards in Q1.
Going to a different economy, and we're going to be learning more about that as we go. But clearly, we're learning that things can be done from remote locations. We're learning that technology can replace people even more than we thought.
We're not going back to the same economy. We're recovering, but to a different economy, and it'll be one that is more leveraged to technology. And I worry that that is going to make it even more difficult than it was for many workers.
In Silicon Valley, and my friends who work in technology know that what we did to the manufacturing workers, we are now going to do to the retail workers, the call center workers, the fast food workers, the truck drivers, and then even bookkeepers, accountants, insurance agents, lawyers, and on through the economy. So what happened to the manufacturing workers is a very clear sign.
And so we'll import Chinese-based CBDC technology. So it's going to be CBDC in a box provided to you by the People's Bank of China.
But every stock, every bond, every currency, every commodity, every piece of art, every private business, every piece of real estate will eventually be a token on a blockchain, an entry on a ledger, permanent and immutable. We will have truth instead of trust, and we will save over $7 trillion a year. 6 to 8% of global GDP is wasted by the friction of the trust industry that's necessary when you have dual entry accounting. With triple entry accounting, which is what a blockchain is, we get rid of all of that friction. It's a beautiful future.
Like what you see in China and their social credit scoring systems, right? If we get identity wrong, it could be a tool to enslave humanity. And if we get it right, it could be a tool to liberate humanity. And as an American, I'm obviously rooting for the one that's on the side of freedom.
Bitcoin is an international asset. And also, I do believe the role of crypto is, it's digitizing gold.
I actually believe this technology is going to be very important. Look at it. We have been part of a huge revolution in investing through ETFs. We believe that ETFs will be changing the whole way we invest. Many people still use it as a means, people are investing it for indexing. No, the majority of people who are putting money in in ETFs are active investors that are buying exposure. The entire bond market is being transformed as we talk right now. I believe the next generation for markets, the next generation for securities will be tokenization of securities. And if we can have that distributed ledger that we know every beneficial owner, every beneficial seller, we all have our code of who's buying, who's selling, instantaneous settlement. And think about it, it changes the whole ecosystem.
Chinese bank ICBC has been hit by a ransomware attack, and the U.S. Treasury market, as a result of that, has been disrupted. This, according to the Financial Times. We're getting it more right now with Bloomberg's Shonali Bassick. Shonali, what do we know?
Listen, we have the Financial Times now reporting that ICBC, one of China's largest banks here, was hit with a ransomware attack. And remember, they're a very significant intermediary in the Treasury market. The SIFMA has told its members that this has been part of the reason here that the system is kind of clogged up, if you will, during that auction that we saw a little bit before. The attack had prevented ICBC, according to the Financial Times, from settling Treasury trades on behalf of other market participants. A large executive at a major bank also telling the paper that such a large party on the fixed income clearing corp creates major concerns, potentially impacting the liquidity of Treasury markets.
Now, it was not just a poor auction. It was absolutely lousy, and you know, when the dealers have to step in to save a Treasury auction, that's a rare occurrence. And
Cryptoteacher and the New World Order book, plus the 3 kids books. It's time to re-educate. Also, new to cryptos, Coinbase, Bitrue, Binance. Do not forget book links and crypto links are in the description. The stock channel, guys. Don't forget to go like, subscribe, spread everywhere. You have your Kobo, your chip stocks, your banking, your gaming. While everybody's sitting at home, get on stocks, the Seaver, the biotech stocks. And while everybody's at home wishing, they were still getting that free money. What are they doing? Drinking and smoking weed. Don't forget about those stocks, and you have a wonderful day. The most powerful person in the world is the storyteller. The storyteller sets the vision, values, and agenda of an entire generation to come. Steve Jobs. And guys, you know I truly believe in this. When you look at the New World Order, they're the storytellers. And that's the reason why I wrote my New World Order book. But guys, now it's time to change the current generation. And I wrote 3 kids books. You know I love the Trinity because I understand the power that's in it. So I have 3 books. We have an opportunity to change the generation, to educate, not just me, but I want to show you that I take action on a daily basis. And I want you to take action on a daily basis. Whether it's your job, whether it's in your community, we have an opportunity right now to educate the masses. I posted this on my Twitter account. Please share, but this is a short clip of the 3 books. There's going to be a clothing line and action figures. Please get these books for your kids, nephews, cousins, friends, so therefore we can start the re-education now. Because as we see, the 4th Industrial Revolution foundation is definitely here. Robots, algorithms, drones, taking humanity out the picture. We have to re-educate. But let's get into the video.
Part 1. King Joshua and Grandma Tam save the village. Part 2. King Joshua and Grandma Tam save New York from COVID-33. Part 3. King Joshua and Grandma Tam goes to China.
It's mandatory to get part 1, part 2, and part 3 of this series. It's time to re-educate Generation Z.